Kunj Bansal joining us on the show. Kunj, let's start with discussing financials itself. Do you think the kind of sharp knock that we are seeing on the likes of IDFC, IndusInd, HDFC, etc. is warranted, or the street is reading too much into the earnings?
Yeah, so always difficult to take such calls, but let's put the scenario in perspective. We all know that hardly till about last week or so, we were continuously hitting life highs in terms of our market, and in general, all the indices, certainly the large cap Nifty and Sensex, followed by Bank Nifty as well, and to some extent even the small and mid caps. Now, one thing which, if we look at the last 2, 3 quarters, it's very well known that the macro numbers of our country are doing very well. So all numbers related to tax collections, GST, PMI services, inflation slowly coming under control and things like that. But the same was not the scenario in micro. And when I say micro, what I mean is in terms of the actual financial numbers of the companies. The consumption slowdown has clearly been visible for last few quarters. Now, in such a scenario, market continuing to go high, one probably was led by the inflows in the market, wherein both domestic as well as global inflows came together and became net buyers, overall increasing the net buying position. And two, probably some under ownership which got built up over the last few quarters for the market as a whole. Now, in such a scenario, it was obviously it's always difficult to predict the time and the extent that when these things will happen, but a balancing of the valuation versus fundamentals was to come in. Now it's quite likely that this might be restricted to today itself. From tomorrow we might see recovery again. So all those things have always been difficult to predict, will continue to be difficult to predict. But yes, at some point of time, for a broader money, or rather for more money to come in, market will need the correction and individual stocks will need the correction. And results in case of some of the companies haven't been as supportive. So while their stock prices moved too much, probably, or rather not necessarily in anticipation, but because of the buying demand that was there. Now results have not been able to support that kind of sharp price rise or the sharp valuation rise that happened in such stocks. And that's where we are seeing correction, which is quite okay, I think. There's nothing to worry as such.
Okay, well, most of the private banking names done, but Axis is still to report its numbers. So let me take it across to Gaurav, find out whether this is going to be a shocker or is it a decent set that one can expect. Gaurav?
So if we talk about Axis Bank, Street is actually a little bullish about Axis Bank and they believe that the bank is going to outperform the Street's expectation at least in this quarter. If we talk about the operational data, they're expecting net interest income to improve almost by 8% this quarter, and the PAT is expected to increase marginally by 1.2% in this quarter on a YOY basis. Now the bank acquired Citibank's customer base, Indian customer business in April, and that is why YOY comparison will be a little difficult for the bank. And if we also talk about the QOQ comparison, that is also going to remain healthy according to the Street. We may see some kind of high cost to income ratio which will bring down the PPOP, and that is why the Street is expecting 4.4% decline in the PPOP this quarter on a YOY basis. NIMs are also likely to moderate, and they are going to, Street is expecting some kind of 10 bips of decline in the NIMs, and this may come somewhere in the range of 4%. PAT growth is going to get aided by the credit cost, lower credit cost. That means the asset qualities is remain to be healthy for the bank, at least what the street is expecting. And going on, we will have to look at what management has to say about the NIMS trajectory and the mix of their deposits, because this will determine the cost of funds for the bank. They will also have to look at the deposit growth, because they have CD ratio of 94%, which is actually a little on a higher side. Let's also look at some commentary coming up on the city's integration and how management is looking at the growth perspective now that the city is now fully integrated in the bank. And lastly, let's also look for any commentary coming up on the cost to income ratio, because that is a little elevated for the bank, and if that comes down, we may see some kind of outperformance coming up from Axis Bank in this quarter.
Okay, point taken. We just heard the commentary from the management of Hero MotoCorp, and of course Bajaj Auto will be reporting its numbers tomorrow as well. But Kunj, within the two-wheeler space, should one make fresh bets into that sector, or there are better opportunities available in the market?
So that's the call one has to first take on the overall market, looking at the way the things have fallen. Of course, it's always difficult to predict things in the short term. Finally, if we look at the number of automobile sales that have happened in the December quarter, the two-wheeler sales have shown recovery, which was not the case till the September quarter. In fact, on the other hand, the higher end consumption, largely reflected by the passenger vehicle sales, was something that was showing encouraging number in terms of sales. Now, in the December quarter, that trend seems to have not seems to have has rather reversed, wherein passenger vehicle sales growth has been lesser and two-wheeler sales have picked up. And that's where we have seen, first of all, in line with the market overall interest in the automobile sector as a whole, the buying coming in, the share prices moving up. In fact, in some cases, extending up to the auto ancillaries also, although that has continued to remain an underperformer. Uh, it will be very difficult to select one over the other in such a market scenario. So one has to go more by the comfort in terms of combination of valuation and fundamentals.
Right. Kunj, one of the strongest of the sectors that's also getting clobbered today, realty namely, and pick up any stock, they are seeing slip off in excess of 5% a piece. Is this weakness to be bought, or would you say wait it out? This is just the first wave of selling which has come in.
So again, we are seeing a very clear, sharp pressure in the market for today, maybe over the last few days also on and off. If we take from the highs of the Nifty 22,000 the Indian market hit a few days ago. Now, whenever we have market corrections, obviously the stocks or the sectors which have moved up sharply will be the ones to face the brunt, and vice versa. So why realty? In fact, today we are seeing the market, and if we want to just kind of look at the market pattern in short term, railway stocks are the other ones which are quite sharply falling today. To add to that, the extended public sector basket is the other third space that is falling today. And to add to your point of realty, that these are the three spaces which had moved up very sharply in the market rise. Of course, the fact that realty is a high beta sector, it will participate both ways more than the market. In a rising market, probably it will go up more than the market, and the same is happening in a falling market. On fundamental side, let's keep in mind that the realty sector has seen one of the best performances in the last few months. In fact, in the financial year 2024 till date, if we take, or let's say the first 9 months, there have been in general record volume sales across major cities, supported by in some cases price rise as well, despite the hike in the interest rate, or despite the hike in the home loan interest rate that was there. So as a result, all these share prices moved up, and in the current market, when market is seeing some kind of volatility or the selling pressure, or some kind of fear, then probably these are falling. So which again, as I say, is a part of the life, and one has to take it in stride.
Okay, since we were addressing the two-wheeler space, let me take it across to Shrishti as well and find out what we're penciling in terms of earnings from Bajaj Auto. Shrishti?
So a good set of numbers is expected from Bajaj Auto, given the fact that the two-wheeler sales has been great for all these companies in the festive period, as well as on the back of a low base. We are seeing a jump on the domestic volumes, wherein sequentially we have seen an improvement of 22%. And the good part regarding the overseas market is that this time there was no drawdown over there, and sequentially it was almost a flattish kind of a growth is what we have seen over there. So all these will reflect into the numbers. Other than that, if we talk about the overall volume, that has also seen a jump of 14%. Onto the number front, on revenue, we are expecting a jump of close to 10% sequentially. EBITDA is expected to show an improvement of 8.5%, and the number is expected at 2,312 crores, and the margins once again are expected to be above 19%. For the same quarter last year, we did see the margins at 19.1%, and this time the expectation is 19.5%. Onto the profit figure, sequentially we are expecting a jump of 30% at 1,961 crores, given the fact that the premium segment has been doing well for Bajaj Auto. The company has been taking price hikes, and all these will play into the earnings of the company. Yes, indeed, the stock has already seen a good run up on the back of the volume push as well as the buyback announcement. But this time as well, we are expecting a good performance onto the number front on the back of a strong volume performance and better realizations. Other than the number front, we will be watching out for the demand trends that the company is looking forward for in the year 2024, and the recently launched new Bajaj Chetak. How is the initial performance and the feedback on that? We will be tracking all these details as well. So a good set expected from Bajaj Auto. Back to you.
That's about Bajaj Auto. But the other space I want to discuss with you, Kunj, is the pharma sector. Today, of course, there was a note from CLSA wherein they've upgraded quite a few stocks and the target price has been increased. Sun Pharma, the top pick in the sector, from 1340, the target price has been increased to 1610. Apollo Hospital, the target has been increased all the way to 7,000 rupees versus 5,870 earlier. Cipla, Abbott India, Zydus Life, Dr. Lal Path Labs, Lupin, these are some of the other names that they're talking about. What do you like within pharma? Is Sun Pharma your preferred bet as well in the sector, or given the strong show from Cipla, that is also something which is also an investable idea?
Yeah, individual stock ideas will always be difficult to find out, but if we look at the top down analysis of the market for last I think 3-4 months or so, finally we are seeing a participation coming in pharma sector. In fact, why participation? In fact, it has outperformed the buying demand coming in, and it's on the back of I think at least 4 years of underperformance of the pharma sector as a whole that has been there. Also, to support that, the fact that in today's sharply down market, pharma is kind of proving its beta nature of being defensive or being low beta by holding, or in fact, in some cases, the stock prices moving up as well. So I think that kind of outperformance in pharma sector should continue given the way the markets have in terms of valuation parameter become quite matured, and that's why incremental money coming in will be looking at the under participated sectors and stocks and under owned sectors and stock. Over and above that, wherever there is a support of the financial numbers, the quarterly numbers, that will be the added incentive, and that's where we can see continuing interest coming in the pharma sector if market volatility, specifically if market volatility continues.
Okay, the other one that will report numbers tomorrow is, of course, Tech Mahindra. Don't be surprised if you see another decline this quarter. It will be fourth or fifth quarter that the company will be reporting declines. This time around, however, the constant currency decline will be limited to 1% versus 2.5% decline that we saw last quarter. Margins are also will continue to be very tepid. 5.1% is what we are expecting, far away from the exit rate that the company had started the year with when they were talking about a 14% kind of exit margin rate. That's clearly watered down to sub 5% as of now. The profitability is expected to improve, however, at 590 crore. A bit of a divergent view when it comes to the deal wins. There are part of the this part of the street which is expecting the deal win to be muted between 300 to 500 million dollar, but then there are analysts at the likes of Morgan Stanley which are expecting the deal wins could be 500 to 700 million dollars. Those graphics will come up for you on the screen with respect to the earnings expectations, because BFSI, high-tech, telecom, they will continue to be sluggish. However, there could be a seasonal pickup in Comviva as well as retail BPO. Kunal, any view on Tech Mahindra? Is there any positions one should take before the earnings on that one?
See, I would still be bullish on large cap IT names. I think not sure exactly Tech Mahindra has confirmed a breakout as such, but then I think most of the large cap IT stocks, TCS, Infosys, Wipro, so far in the last 4-5 days have been relatively shielded. These stocks have just managed to, so for example, Wipro was one of the ones which had gained up significantly higher. It's come back towards the starting point of the rally. I think it was around 450 odd mark when the stock had shown that 15-18% kind of a jump for itself. So I think it's just come back to that 470 levels, which means a mean reversion more or less has happened for the stock. Infosys, on the other hand, I think the stock is still trading at its multi-week swing high. I think it's off by just few 1.5 percentage points for itself. And same is the case with, I think, TCS. So that generally indicates that large cap IT stocks are relatively shielded. And I think that's where one should probably look to bet into, because I believe that whenever the next phase of the rally starts off, the large cap IT stocks can stand to significantly outperform.
Okay, betting on large cap IT names seems like they've bottomed out, at least in the near term. But let's get in some BTST trades as well. Or Naresh, is it going to be an STBT idea today?
So one long, one short. First would be a buy on ICICI Bank, which has been holding on well in today's market. Stop loss at 1,010, target price of 1,060. Second is a sell on L&T, which has finally given first signs of reversals. A stop loss at 3,600, target price of 3,500.
Right. Kunal, what about your strategies?
So I'll go with the first one, which is a buy on Petronet, something which we discussed in the morning. Would suggest a buy, fresh buy with a target of 270, 275. Stop loss could be kept at 255 for traders who are looking at a fresh buy at current levels. And IDFC First Bank, even after today's selling of 7% approximately, I think becomes a good shorting candidate. So would suggest a sell with a target of 77, stop loss at 85.
Okay, point